Have you ever stared at a stock chart, feeling completely lost, wondering if the price is going to go up, down, or sideways? What if I told you there's a tool that can act like a traffic light for your trades, telling you when to go, when to slow down, and when to stop? Well, get ready, because today we're diving deep into one of the most popular and intuitive indicators out there, the Kdj Indicator. Welcome back to the channel, everyone. If you're passionate about becoming a smarter, more confident trader, you're in the right place. Today, we're unpacking the Kdj Indicator. It might sound complex, but I promise, by the end of this video, you'll understand how it works and how you can use it to spot potential trading opportunities. So, grab a notebook, and let's get started. First things first, what exactly is the Kdj Indicator? Think of it as an enhanced version of the popular stochastic oscillator. It consists of three lines, the K line, the D line, and the J line. The K and D lines are similar to the stochastics. They measure the momentum of a price move. The real magic, however, comes from the J line. The J line represents the difference between the D and K lines, acting as an early warning signal for potential trend reversals. So, how do these three lines work together? The K line is the fastest, reacting quickest to price changes. The D line is a smooth version of the K line, making it a bit slower. And the J line is the most sensitive of all. When these lines cross, it can signal a change in momentum. A golden cross happens when the K line crosses above the D line, especially in the lower part of the indicator's range. This is often seen as a bullish, or buy, signal. It suggests that upward momentum is building. Conversely, we have the death cross. This occurs when the K line crosses below the D line, particularly in the upper part of the range. This is typically a bearish, or sell, signal, indicating that downward momentum is taking over. It's this simple crossing mechanism that makes the Kdj so popular with beginners and pros alike. It gives you a clear visual cue to work with. Now, let's talk about a key concept: overbought and oversold conditions. The Kdj indicator oscillates between 0 and 100. Generally, when the lines move above 80, the asset is considered overbought. This doesn't mean you should sell immediately, but it's a warning sign. It suggests the price has risen quickly and might be due for a pullback or a period of consolidation. Think of it as a car engine running hot. It might need to cool down. On the flip side, when the lines dip below 20, the asset is considered oversold. This indicates the price has fallen candidateously and might be poised for a bounce or a reversal. It's like a stretched rubber band. Once released, it's likely to snap back. These overbought and oversold levels are crucial for identifying potential entry and exit points, helping you buy low and sell high. One of the most powerful features of the Kdj is its ability to spot divergences. A divergence happens when the price of an asset is moving in one direction, but the Kdj indicator is moving in the opposite direction. For example, let's say the stock price is making higher highs, but the Kdj indicator is making lower highs. This is called a bearish divergence. It's a huge red flag. Projectos that the upward momentum is weakening and a reversal might be just around the corner. Similarly, a bullish divergence occurs when the stock price is making lower lows, but the Kdj indicator is making higher lows. This is a very strong signal that the downward pressure is easing, and the bulls might be about to take control. Spotting these divergences can give you an edge, allowing you to anticipate trend changes before they become obvious to everyone else. It's like seeing the storm clouds gather before the rain starts. Let's put this all together with a practical strategy. A common approach is to combine the signals. For example, you might look for a golden cross happening in the oversold area, below 20. This is a double confirmation. The asset is potentially undervalued, and the short-term momentum is shifting upwards. This high-probability setup can give you more confidence in your buy decision. Likewise, You could look for a death cross occurring in the overbought area, above 80. This tells you the asset is potentially overvalued, and momentum is shifting downwards. This combination can serve as a strong signal to consider taking profits or even opening a short position. By waiting for these combined signals, you filter out a lot of the noise and focus on a plus setups. However, it's crucial to remember that no indicator is a crystal ball. The KDJ, like all technical tools, can give false signals, especially in choppy, sideways markets. This is why it's absolutely essential to use it comunicado with other forms of analysis. Never rely on the KDJ alone. Combine it with other indicators, like moving averages or RSI, to confirm its signals. Also, pay close attention to price action, support and resistance levels, and the overall market trend. A holistic approach is always the best approach in trading. To recap, the Kdj indicator helps us gauge momentum and identify potential trend reversals. The golden cross is our buy signal, and the death cross is our sell signal. The overbought zone above 80 and the oversold zone below 20 help us find opportune moments to enter or exit. And divergences can give us powerful, early warnings of a trend change. Remember to always use it as part of a complete trading system, not as a standalone tool. I hope this breakdown has demystified the Kdj indicator for you. It's a fantastic tool to have in your trading arsenal. The key is to practice. Open up your charting platform, add the Kdj indicator, and start observing how it behaves with your favorite stocks or assets. The more you watch it, the more intuitive it will become. Thank you so much for joining me today. If you found this video helpful and want to learn more practical trading strategies, make sure to hit that like button and subscribe to the channel. Don't forget to ring the notification bell so you never miss a future video. Do you use the Kdj indicator? Share your experiences and tips in the comments below. I love hearing from you. Until next time, trade smart and trade safe.